earnings actually that have come out over the weekend. We've had the earnings of ICICI Bank, IDFC First Bank. We also have Bandhan Bank that's reported their numbers, and Bandhan Bank right now is surging in trade, 9% uptick coming in for the counter. We are joined by Ratan Kumar Kesh, who is the interim MD and CEO at Bandhan Bank, on the show. A very good morning to you, sir. Thank you so much for joining us in ET now. And let's talk about your earnings then. Your loans and advances saw a growth of about 21.4%, which is much above the average banking sector growth. If you could tell us, where are you seeing this, or which sectors or which segments have actually contributed this growth? What are the drivers that you are seeing at this point in time?
So the growth, as you see, our retail book has grown by 92%. Commercial has grown by 40%, and housing has grown by 17%. And EB YOY, it has grown by 10.6%. So that's where it is. So that's in line with the stated strategy, as you know, that we will be moving into more secured as a portfolio. Even in the retail sector, the growth has been largely coming from the secured part of the portfolio. So our secured book has gone up from 42.9 to 47% on sequential quarter-on-quarter basis.
Okay, Mr. Kesh, this is Snehi also joining in the conversation. Strong loans and advances growth, but similarly, your deposits have also gone up by 27.2% on a year-on-year basis. You have other banks that have been struggling when it comes to both of these numbers. What is your lending and deposit growth target for this fiscal year? If you could share that number with us.
So we will continue to grow our lending book at 18% plus minus 1. And the deposit book will grow faster than the lending book. And therefore, the CD ratio will keep sort of maintaining below 90% or so. In that, as I said, our secured book, which is currently at 47%, we will keep inching it upwards just to make sure that the overall risk on the overall portfolio keeps coming down going forward. Generally for us, as you know, microfinance part of the business, which you call at EB, for that business, quarter 3, quarter 4 are better quarters for us. While we would like to continue to grow that book at 10 to 12%, given the overall industry over leveraging and overheating, we are being extremely watchful. And therefore, while in quarter 1, we had seen a 0.5% degrowth. In quarter 2, we have seen 4.2% degrowth on quarter-on-quarter basis. We will continue to remain watchful on that space to make sure that we are not creating additional stress in the portfolio quality for the bank.
Right, but if you look at your slippages, they've actually gone up from 890 crore rupees in the last quarter to about 1,110 odd crore rupees in the current quarter. If you could explain to us, where are you seeing stress, or are you expecting further stress when you talk in the quarter that we are in currently, that's Q3, and also in Q4? Are you expecting any further stress because your slippages have risen, right, on a quarter-on-quarter basis?
See, the asset quality in terms of slippages has gone up from 898.9 billion to 11.1. It has gone up from the previous quarter. We believe, given the large part of it is actually coming from the microfinance sector, the EB book, which is roughly around 7.5 billion odd. We believe that the elevated risk in the portfolio will continue to remain in quarter 3 as well. While our DPD pool has gone up, if you see our SMA 1 and 2 remain in the range, and therefore we don't see too much of that flowing through in the quarter 3. Already in October, we are seeing a bit of an improvement in collection efficiency, at least in the regular bucket. And therefore, our belief is that quarter 4 should be better than quarter 3. Quarter 3 will remain as elevated as quarter 2. But what we are doing specifically is we have not only implemented the MFIN SRO guideline. In fact, we had implemented even before they have put this guardrail. As you know, we have been implementing a lot many more guardrails. We also have independent credit underwriting team for the microfinance book. We also have improved our collection network. We are implementing state-of-the-art collection system. And in every pocket where we see specific stress building up, we are increasing the bureau cutoff score and containing the portfolio growth rather focusing on collection efficiency. So some of these steps will continue. And we believe, given what we have done over the last 18 months or so in terms of improving our portfolio quality, we will continue to perform better than the industry. But we are not isolated in overall sense. To a large extent, we will still
Right.
get impacted, at least in quarter three. The overall credit cost guidance for the year will continue to remain at 1.82%, which is what we guided at the beginning of the year.
Okay, well, good to hear that. But Mr. Kesh, also help me understand that the share of commercial banking in your overall portfolio of services is rising. It's gone from 21.4% last year. This time around, it's come in at 24.7%. I want to understand, is this a deliberate strategy of the bank? Is this being done intentionally, or is this just the kind of demand that you are seeing from your customers?
Yeah, very much so. As I said, we will grow our secured book to from a current 40. It's already gone up from 42 to 47. It will go to around about 55% in next 2 years or so. And in every quarter, we will keep improving that. So commercial book will go up. It will grow at a faster pace. This quarter, it has grown at 40%. It will continue to grow at a faster pace. Also, the commercial book gives me a good quality customer, secured book, and it also gives me opportunity to earn more fee income through the transaction banking products, and some of those products are currently on work in progress for us. Given the technology transformation had been completed, we have been working on some of those. So some of these will come handy in terms of overall income for the bank.
Right. And lastly, I wanted to understand if the case with NCGTC, that is the National Credit Guarantee Trustee Company, is that now the case completely settled now? Also, given the fact that you are supposed to get some claims which were much higher than initially expected. So in which quarter are you expecting a complete closure and the recovery of that?
So the overall claim settlement is 1231 crore. That's for the whole portfolio. Given that NCGTC had already settled 916, we are expected to get 315 more crores. And we had collected 228 crore from the lot of customers where claim was settled. That money was lying in our balance sheet, which will, the fresh claim is net of all of these previous recovery. So that recovery we will now account for. So total 543 crore will be accounted for as other income. As of now, in quarter two, we have not accounted for it because the money is yet to come. We are working on the operational readiness to make sure that the claim is made by us, which we will do in quarter three. The matter is resolved, and we are just going through the operational processes to upload the claim, and then we will get the money settled.
Okay, Mr. Kesh, thank you so much for joining us and being really candid with everything when it comes to your numbers, your growth outlook. Thank you so much. And from everyone here at ET Now, on behalf of everybody, I'd like to extend the season's greetings to you. Festive greetings to you, Mr. Kesh. It's a happy Diwali from all of us.
Wish you happy Diwali to you and your viewers. Thank you.